Well, 300 million shares of AIG will hit the markets after today's closing bell. 200 million of them will come from the U.S. Treasury. The government's reducing its stake in the bailed-out insurer from 92% down to 77%. Joining us to discuss this is Bloomberg contributing editor and author of 2 books in the financial industry, most recently about AIG. Bethany McLean's with us from Chicago. Bethany, always good talking to you. Tough time to have a re-IPO, as it's been called.
It is. I don't think this is what the government was planning on when they originally began to contemplate this. AIG's stock price was doing a lot better, and it's obviously plummeted over the course of this year. Yeah, making it questionable whether the government's going to break even on its sale.
Yeah, we're just about right there. $29.58 a share right now, and I think the Treasury has to be at $28.70 to be profitable.
Exactly.
Well, I mean, we're going to see more of a float now. I mean, should we expect buyer interest? The company that's going to be out there is a lot different than the one that existed pre-crisis.
You know, that's exactly the point. I think it's hard not to hear the name AIG and associate it with this storied company of the past, but today's AIG bears very little resemblance to that AIG because most of its crown jewel assets have been sold off in an effort to return taxpayer cash. So you can't really link this AIG to the old AIG. And the stock price in the past, in recent history, is also something of a false comparison because the float was so small that a little bit of buying could push it much higher. So as the government begins to sell down its stock and the float becomes a lot bigger, that also changes the dynamics. And when you really look at what today's AIG is, it's a collection of decent businesses and with very murky growth prospects. So it's really unclear whether this is a great deal or not.
All right, I mean, you're not buying Greenberg's AIG, you're buying Ben Moshe's.
Yeah.
What are you actually getting?
You're getting a collection of good businesses with some real question marks about the future. And what people tell me is the biggest question mark is ILFC, the aircraft leasing business, which has always been a real black box to analyze. And I've been told that the argument on the part of the underwriters is that the stock is being priced cheaply since it's going to be a discount to book value, about 2/3 of book. But on an earnings basis, it's going to be priced at about 9 to 10 times 2012's estimated earnings, which isn't all that cheap. So you have to believe in the growth prospects for this collection of businesses. In reality, it's kind of a conglomerate of decent insurance companies, but nothing really stellar. And you're exactly right, you don't have the old Hank Greenberg magic.
Well, I would love to see him this afternoon as this offering comes up. Anyhow, Bethany, always great talking to you. Thanks for making time today.
Thank you.